David, as you know, where there is consensus right now, a lot of people believe the Fed needs to get less restrictive. There's another element to this as well. I just wonder whether you think they need to get accommodative. And when we talk less about the path and whether they go 25 or 50 in September and talk more about the destination, where do you think they're going to end up here at the Federal Reserve?
Well, I think that Jay Powell gave us a ton of information at the podium last week at the press conference when he uttered the word normalization to describe the labor market and the economy no fewer than 11 times. Normalization. So things have normalized. You strip out the nonsense around owner's equivalent rent and the lag nature of the actual rents, and inflation is basically back to target. And the unemployment rate is actually higher now than it was before COVID, when the funds rate was 1.75. So he uttered the word normalization. The only thing that's not normalized is the Fed funds rate. And so what's normalized? Well, according to their own estimates, the neutral rate, the equilibrium rate, the rate that we should have in a balanced economy, which he said we're in, is 2.75. And every Taylor rule estimate shows that today the funds rate maximum should be 4%. We're still 5.25, 5.5. So they are ridiculously behind the curve, no matter what's happening with the equity market. And it wasn't about data that caused the markets to start thinking they're going to go intermeeting. It was, are we going to continue to get 1,000-point down days in the Dow? That was just all about the stock market. But they are ridiculously behind the curve, irrespective of what the capital markets are doing. So he basically said things are normalized, and we do not have a funds rate that is consistent with a normalized economy. So they have a long road to hoe.